gosh, just because you're 65 doesn't mean you have to stop working too. And some people really enjoy working and don't work till, 70, 75, just maybe at a lesser role. And maybe that's the retirement for them because their work is their life and that's how they identify, is I do this and I ran this company and I it's my baby and I don't want to get rid of it, right?
I can't wait to introduce you to Knowing Me, Knowing You, the Know Me podcast where the future of financial advice starts with discovery. We're bringing you candid conversations with top industry leaders, innovators, and behavioral finance experts, exploring how wealth managers can deepen client relationships, personalize advice at scale, and drive real business growth. Because clients don't just want financial plans, they want to feel understood. They want to be known. Stay tuned, subscribe, and get ready to transform the way you connect with clients. Know Me, transforming discovery into growth. Hello, and today we're joined by Chad Taylor, president and founder of Seapoint Wealth Advisors, an independent wealth management firm based in San Diego. Chad has spent nearly 3 decades helping high net worth families and business owners build, preserve, and transition wealth through some of the most challenging market environments. After a successful career at UBS, he launched Seapoint Wealth Advisors in 2021, mid COVID, to create a more independent, client first approach to financial planning. A CFP professional, Chad has been recognized by Forbes the best in state wealth advisor multiple times as a 5-star wealth manager and was named one of San Diego Business Journal's 500 most influential people. Wow. Let's see. Let's see how influential you can be here, Chad.
Do my best.
What stands out most about his philosophy is a simple idea. We can't control the markets, but we can control how we plan. Today, we're going to explore financial freedom, what it means, why behavior often matters more than investment selection, and how advisors can help clients build confidence in an uncertain world. Chad, welcome to the Knowing Me, Knowing You podcast.
Thank you, Marla. Thanks for having me.
Yeah, excited to have you here. So, we always start off with what excites you about the moment we're in right now, about the future of wealth.
Well, I think the business is changing right now, with artificial intelligence and the way that's affecting how we do things and work with clients. Portfolio rebalancing, tax loss harvesting, picking stocks. That's changing, right? It's becoming easier with the use of technology and artificial intelligence. So I think a lot of that stuff becomes table stakes when you're working with clients. And so what matters to clients and is how deep do you get with them? Are you, talking to them about their family? Is your client sick and are they dealing with, cancer in the family? Those things AI is not working with yet, right? So how you work with your clients, understanding their relationship with money, how you work with their financial plan and their actual life versus just what AI can do for them behind the scenes is I think what's changing this business. So it kind of takes away, what we did previously and it really pushes you to move forward and build that relationship with the client because AI is taking care of the stuff behind the scenes for you.
I love that. And I love that you even gave examples of like, we used to sell these really complicated terms that customers didn't really understand. So we kind
Right.
of threw around tax loss harvesting and tax optimization and all of the, all kinds of different fancy rebalancers. Great. But at the end of the day, it's about building depth and understanding the client better.
Yes.
Love that. You spent a lot of your career at major brokerage firms, a lot of your time at UBS before you came to Seapoint. What problem did you see that convinced you that independence was the right move?
Well, I think the big firms, they serve their purpose, right? I mean, you get a lot of resources that are out there you can kind of lean on them for, right, when you're starting your career. But what you notice is that over time, the big firms are really pushing their agenda, right? So you're kind of serving what they want you to do for your clients. Is it pushing their proprietary funds, which that's kind of gone away over the last several years, but they saw the proprietary funds they want you to kind of put in front of your clients. Do you have revenue targets you have to hit? Do you have to hit this number of like mortgages you sell each year to get your bonus, right? So you're not really serving what the client wants. You're serving what the firm wants you to do to get your payout, how they're structuring your payout each year. And that's not what we're in this for. You're in this for working with your clients and doing what's right for them and what's best for them, not how you get paid or how your comp gets paid from the big firms. And so to me, that's always been the biggest issue is you're kind of got these two things going. You got what's right for the client, and but hey, the firm's saying you got to do this to get paid, So, I don't want that conflict when I'm talking to my clients. I want to be able to make sure I'm making the right decisions for them based on what's best for them, not what my comp is. And so that to me was what kind of made the after the last few changes when I was at UBS, at that point I'm like, okay, we need to start looking someplace else to maybe go independent. And now what's great about the independent world is, they have as much resources, if not more, than the big wirehouse firms. You don't
Hmm.
lose anything by going independent. You have probably more resources because you're not stuck with what's proprietary for the big firms.
Yeah, that makes a ton of sense. And side question, was it a long decision or was it like, no, I made the decision, I'm going to do it?
Well, it was a long decision because I wanted to make the right decision, right?
Mm,
So I knew when they made that change and deferred a lot of our comp based off of what we were selling for the firm, that I did not want to be there long term. And so but I didn't wanna make a lot of changes after that. I wanted to find a place to go and make it my, forever home, right? And so I spent probably, oh, it's probably about a year and a half, 2 years just interviewing different companies, different RIAs, different firms to try to find the right platform for me. But I knew I was leaving. Wasn't sure where I was going.
makes sense. Um, so you talked a lot about getting to know your client and like really serving the client, doing what's right for the client is the words you used. When they come in as a brand new prospect and they're feeling anxious about their finances, how do you start the first conversation? And what steps are you taking to kind of move beyond here are the products and the markets kind of outside of their little vacuum of their lived
Sure.
life and uncover what's really important to them?
Well, I think when somebody comes in, they're nervous, right? It's the unknown of what they're trying to solve for. And so I mean, gosh, I mean, if I was talking about products in that first meeting, I'm not doing a very good job because I don't know what they need until I've had this conversation with them. So a lot of it's just sitting down with them and looking at their goals, what they're trying to accomplish with their current funds, where they are today, where they're trying to get to, and looking at the numbers, but really kind of saying, okay, what's your relationship with money? Are there things you're trying to accomplish? Do you have kids that you're worried about, like launching their career, going to college? And just understanding what that concern is with them first before you kind of dig into, here's how we're going to solve for it, right? Really understanding what their challenges are, what their concerns are, and what their life experience has been, with the markets, right? Did they invest a bunch of money in 08, 09 and lose 70% of it when the markets crash and now they're scared to death in the markets? Well, yeah, treat that person differently than somebody that invested after 2008, 2009 who, saw, 300, 400x return on their portfolio because they missed that crash. And so it's really getting to know them. And then I think once you get to know them and they realize you're not selling their product and you're, trying to figure out their game plan and how to get them to where they want to go, I think then at that point they start to relax and you just have that conversation with them. And then you can kind of build out the plan and then, come back to them with recommendations for the investments that are going to fit what their plan calls for, what the allocation calls for.
Yeah. You write that a lot of your clients are high earners, they're executives, they're business owners. A lot of them probably even benefited from that 300, 400x
Oh
kind
yeah.
of bull market we've been in. Why do you think so many people who are objectively doing well still feel like they're financially behind?
I think the first problem with that is it's the benchmarking, right? The high earners who might be new high earners, so they might be making a lot of money now, but they haven't been doing it for 5, 10 years. But their peer down the hall or their neighbor down the street, um, they're looking at them and saying, well, wait a second, I know I make as much as this person does, or I even make more than this person does. Why are they so far ahead of me? Right.
Hmm.
And so it's the benchmarking to the other people and then thinking to yourself, well, I'm not where they're at, but I'm doing well for myself, right? And I think, gosh, I think back to the time when, um, I mean, I'm talking a long time ago. I had a friend of mine who played for the Cowboys, and he had just tore his ACL, and we went to his apartment, and there's no furniture, 100 Nikes stacked up against the wall in boxes, a coffee table and like a dining room chair. And I went to my friend that was good friends with him. I'm like, what's going on here? I mean, he makes X amount of money per year, and he can't even afford, you know, basic furniture for his apartment complex. And he's like, well, you got to remember, he goes, when your locker mate is Emmett Smith on one side and Deion Sanders on the other side, and they're making 15, $20 million a year, and you're making $1 million a year, and you're going out and partying with them and vacations with them, your $1 million a year doesn't go as far as their $20 million a year goes. And so, that spending to keep up with the Joneses, I think, is where people start getting behind or feeling behind. It's that lifestyle creep, right? And so, be able to maintain your level of lifestyle, but not, taking every new income or bonus and keep spending it to where you're not saving to kind of build for that retirement goal. I think that's what hurts a lot of people when they start making a lot of money is the, like I said, the lifestyle creep and, spending what your neighbors spend.
Yeah. And then we talk a lot about the goal itself.
Yep.
So when you think about the goal and you are progressing through life, the goal does not say stay stagnant. At one
No.
point in your life, $50,000 sounded like a hell of a lot of money.
Oh yeah.
And then $100,000, and
Yep.
then it jumped up to maybe 500, and then it all jumped all the way up to 2,000,000. And now you're like, I'm not happy until I see at least $7,000,000. And so the
Yeah.
goalpost keeps getting pushed back. And
Yeah.
yeah, I'm just curious how you've seen that. How do you address that goalpost moving each time?
Oh, I had a meeting with a client 2 weeks ago, and we're sitting there in Starbucks, and we're laughing because his original retirement goal, I think, was $7 million, like you just mentioned there. And now he's like, I don't know how I could retire for less than $25 million. you know, and so now we're looking at his goalpost went from 7 to $25 million. That's a completely different plan you're creating for this client. And it's he's obviously done really well for himself, and he's got some options, and he made a couple private investments that have done extremely well. So he's going to be fine at that $25 million, but there's no way he can go back to living on, $7-10 million as his target for his retirement plan. So yeah, it's and in his case, it was okay, it works out, but you got other people who are like all of a sudden, their plan is for $5 million of retirement, and you're looking at the numbers, and based on your spending, you're like, you can't do it for less than 10 million. Right.
Yeah.
And so you have to have those conversations with those clients and look at their plan and their withdrawal rates and, their target line and how they're going to get to that number and just, have real conversations. This is, if you want this and this is what you want to spend, maybe you can't retire at 65 or you need to work a little bit longer or save a little more during this time until you get to retirement. But it's just, that's the yearly conversations where you go in depth and look at their plan and their target and see if they're on track. And, is their budget real or is it not real? Right. Because a lot of times when people get to retirement, they think, they're making, three, $400,000 a year and they're going to spend 250. Well, how are they going to cut that $150,000 out of their spending? Right. I mean, it just doesn't go away. So they got to be realistic too with what they're actually spending versus what they're planning on spending.
Yeah. Yeah, I appreciate actually going into depth there and the stories that you shared about these different clients. As you are growing and you're now kind of under the LPL banner, you're working with Seapoint, you've been doing it since 2021.
Yep.
How are you creating a repeatable process? Are you bringing in junior advisors? Are you training them up and helping them understand how to make clients feel understood? And how are you doing that? How are you looking at creating consistency at scale as you scale?
Yeah, so far, we have mostly brought in experienced advisors versus
Mhm.
the junior advisors so far. So we haven't had to really kind of teach that junior advisor how to work with a new client to take care of them the way they should be taken care of and address their needs. We do have standard operating procedures where I lay out from A to Z what we're doing for each client. This is how you talk to a prospective client. This is how you follow up that prospective client. Once that prospective client agrees to go through here, this is the next thing you're going to do for this client to kind of do the discovery phase. Once they become a client, here's our onboarding process for the next 45 days. Once they're onboarded, here's your call cycle, here's your review cycle. And so it's all laid out for them in the standard operating procedure. Now, like I said, most of the people that we brought on have been experienced advisors and they know how to do this, but we still believe, under our firm, we should be doing things a certain way. And so we're pretty much have put all the advisors into this program where it's like, here's how we're going to do things based on the C point way, right? And they've all kind of bought into it and they read the standard operating procedures, and in their contact management system, they built the review cycle and the call cycles and the onboarding process. And so we're all kind of systematizing that so we get the same type of service to all the clients. We did have one newer advisor that just started about a year and a half ago. brand new to the business. She was a teacher that has retired from teaching and wanted to get into the financial service business. And one of our senior advisors kind of took her underneath her wing, and they worked together for the last year, kind of going through meetings and prep and all that, using the standard operating procedures to kind of show her how to do that. Um, but like I said, we are getting to the point now where we probably will be adding more, new advisors to the firm, and we'll use the standard operating procedure to kind of take them through the training course.
That's really helpful to understand. Thanks for sharing how you do that and what that looks like. We talked earlier about what you're most excited about in the future of wealth today is really evolving from product to depth. And before we started recording, we talked about how retirement was so simply defined as a number. Let me help you retire at 67. And that'll mean that you can then die at,
Yeah, right.
90 or whatever it might be. How do you feel like the way we talk about retirement and financial freedom is changing today? And do you feel like the market is demanding more? Clients actually want to understand, hey, don't just give me a number and an age. Help me make sure I can afford the things I want to do when I get to those stages and milestones.
Yeah, I think you have to kind of reframe the whole plan, right? I mean,
Hmm.
gosh, just because you're 65 doesn't mean you have to stop working too. And some people really enjoy working and will work till, 70, 75, just maybe at a lesser role. And maybe that's the retirement for them because their work is their life and that's how they identify, is I do this and I ran this company and I it's my baby and I don't want to get rid of it, right? So I think you gotta think of like options, not maybe age, where, if you're still working, do you have that work optional lifestyle, right? Could you take a year off to take care of a parent that's sick or, um, you know, raise your kid or help your kid with their, buying a house or with their first job and as they're just starting out? Could you maybe take some time off or help get them money as they go and to not affect your plan. And so I think, you're building towards flexibility for that plan and for what they want to accomplish in their retirement versus just that number and how long will my money last. Like you said, if I retire at 65, can I get to age 90? Right. Well, I think now, like I said, more people are looking for that flexibility to do things they want to in retirement versus just retire, play golf, and draw a salary of their portfolio.
What if financial planning wasn't just about numbers, but about you, your values, your goals, your vision for the future? Nomi is transforming client discovery for wealth managers, going beyond assets and risk scores to uncover what truly matters. With behavioral insights and real time data, Nomi helps advisors personalize advice, build deeper connections, and grow their businesses. Because the best financial decisions start with knowing you. Discover the future of client engagement at Nomi.com. So, this is just a random out of curiosity. So, when
Yeah.
you think about where we are as an industry, and helping clients define the what do I actually want out of my future? Do I want to help my kids, as they're getting started in their jobs? Do I want to take a year off? Do I want to launch a startup? Do I want to become independent? Do I want to sell my business? Do I want to live as an expat for 2 years at a time? How well are we doing as an industry? Let's say 1 to 10, to help advisors actually extract that type of information.
Yeah, gosh, I think it's so depend on the advisor you're working with, right?
Mhm.
'Cause I think there's so many advisors still transactional,
Yeah.
and it's more about the investments and, the return, right? They're the advisors that tell you like, I'm gonna get you this amount of return in the markets, and we're gonna beat the markets every year. And where I think you go to, I think like we kind of talked about earlier in the conversation, a lot of that stuff to me is gonna become table stakes. The AI will help you build your portfolios, based off the risk metrics and what you're trying to accomplish and what you see in the outlook in the portfolio. Sorry for the economy. And so really it becomes as an advisor, are you really getting to know your client and what they're doing, which is kind of like I said before, pushing you away from the stuff you traditionally did as an advisor to being more that counselor, almost. Sometimes I kind of see myself as more of a therapist to my clients than an advisor because it's talking about the behavioral stuff,
Mhm.
the fear and greed of the markets, or something that's happening in their life, and how's it going to affect them in their retirement or their husband or whatnot. And so, I mean, I personally think we moved more that direction and have gotten away from the investments and performance and more towards being that counselor and advisor beyond what you think of traditional retirement planning. Um, I don't know if the industry's gone that way yet or not, so I'd probably have to say it's probably, very low, like a 3 to 5 range.
Yeah. I appreciate you sharing that, and thank you for kind of getting into that detail. So you work with a lot of executives who have come into capital. You shared the story of one guy who's made some private investments and now he's
Yeah.
looking at $25 million retirement. What mistake do you see them making? Like when somebody's coming into capital and they're like, "Oh, I'm doing great. I've got my financial advisor. Now I just got a big windfall." Then what? What are they doing that's totally messing themselves up?
Well, for one of the ones I see a lot is, well, I shouldn't say a lot, but is they get that windfall and they assume it's gonna happen every year, right? And
Hmm.
so it's like, they buy something big to celebrate that win, thinking that next year they're gonna get the same bonus or the same RSUs or the same, payout they've received previously, and it doesn't happen all the time, right? And so all of a sudden they spend all this money thinking it's going to continue, and all of a sudden you're looking at them like, you've now created your lifestyle creep because now you spent this money from your big win from selling or the RSUs. Now that's changing. Well, what do we do, right? Now we have to change our spending, our lifestyle, our retirement goals because those wins didn't continue. Or you sell a business thinking that you're set for life, and in my mind, I'm thinking of this one client, and you make some big investments outside of like a normal stock portfolio because you saw something on Instagram and it ends up being a bad investment, and you lost a big chunk of your
Of
your windfall you had from selling your business, and now all of a sudden you're not on track anymore. And so how do you remake that money that you just lost when you're not working and you sold your business? Right. So I see a lot of that where it's like that's going to keep continuing. That money's always going to continue, and I can just keep doing this. And versus like, hey, this is a good windfall. What's a really good strategy based on what we know today? Assuming that it might not continue, how do we handle it that way? And so it's that same thing. It's a lifestyle creep. It's spending to feel good because I just made $1 million on a bonus. So I'm gonna go buy a big boat, right? Things like that. And then also that big boat's a big expense, or
mm,
a second home. And that second home they don't want to rent out, and that's a big expense that they weren't planning on. And then all of a sudden the bonus dries up, or it's not the same as it was, and they can't continue to maintain the boat or the second home. Those are some of the mistakes I see. Now, fortunately, it doesn't happen a lot, but you do see it.
yeah, I think there was a story in the story there for a lot of people who are listening here. Just because you hire a financial advisor and you're paying for support and guidance doesn't mean it's going to stop you from making that investment off of Instagram. there,
Yeah,
there's a lot of clients, I think, and individuals who I'm sure are listening to this podcast who are like, "Oh yes, that's been me."
yeah,
Nobody can save you from that mistake. You can hire an advisor who can help you, but
yeah.
I love that you kind of told that story in there. Let's just make sure everyone heard that one again.
I'm always on laughing on it because I was just, they came to me with one investment, and I'm like, okay, that sounds like it's coming off of a social media ad. And then, they made the investment, they came back with another investment. But I'm like, I know that's a social media ad. And so I asked Mark, are you getting the stuff off Instagram? He's like, well, yeah, but we've done our own research on it. I'm like, okay. But yeah, you shouldn't be getting your advice off Instagram or TikTok.
Yes, that's yeah, not the best source of research. Let's talk a little bit about the next generation. So next generation clients, next generation advisors. When you think about conversations and how they're changing. So when you came up through the bigger firms, you learned how to be an advisor at those bigger brokerage houses. What's changed? How do you feel people want to engage? Do they still want to sit in meetings? Do they want to do more over text? Like how are we adapting to the needs both on the advisor side and the client side?
Yeah, I mean, I think which from COVID, the biggest thing is most people don't want to do in-person meetings anymore. They'd rather
Mhm.
do Zoom, because they don't have to get in their car and drive to an office, and they can sit in their house in their pajamas and do a meeting with their advisor versus getting out, right? So and for me, like, it helps me because I work with a lot of clients outside San Diego. And so I used to have to travel to Seattle and Vegas and Portland and Texas, to meet with my clients and do the reviews. and updates and just, sit down with them. And most of them now, like, look, just do a video call. We got used to it through COVID and we like it. And I don't have to drive to downtown Seattle and it's easier for me. So I think that's changed a lot. I think it's also hurt a little bit too because you lose some of that personal connection that I built over the last, 25 years going to see these people in person and sit down with them. But they like it, and I actually like it as well too. So I think that's been the biggest change I've seen in the business for um, how people want to do their meetings and meet. Um, Other than that, like I said, uh, I think the business is still the business, right? I mean, it's a lot of the stuff is things I've been doing for 25 years, 29 years. I don't think a lot of that has changed. It's just technology has kind of helped with some things and sometimes made things a little bit impersonal. But I think there's the AI note taker that helps sum up your meeting. You send it to them afterwards, and it's got a nice little you know captures everything we talked about and outlines the next steps. I mean, those are all good things that I think, is kind of adapted to their business. So not sure I answered your question, exactly what you're looking for there, but
That was a
that's what I
very
kind of
good answer.
noticed.
It was very telling in kind of your answer. And as we look about AI and technology, where do you think advisors create the greatest human value today? So when you think about that evolution from product to client depth,
Yeah.
define that a bit more. Where is the greatest human value? What can we do that tech can't do?
Well, I think it goes back to, was it not Marcus, but Goldman Sachs launched that
Mhm. It was Marcus,
AI.
yeah.
It was Marcus. So, and it didn't do very well, right? Because it could build your portfolios, but it couldn't have that conversation with you. And so, when the markets are down 1,000 points today, and a client can just call in and tell Marcus to sell, there's nobody in there really talking to them and counseling them about why would you sell right now. There's a lot of stuff that looks really attractive to maybe pick up and buy versus sell. And so it's still managing that emotion that the clients have, the fear and greed of the markets, talking to them about real situations, that the AI can do. And so, like I said, it's kind of pushed us more forward into being more connected with that client versus just somebody that manages their investments. It's really managing the emotions, the behavioral side of finance that I think has become way more important now than it has in the past.
We couldn't agree more with you over here in the Nomi world. That is exactly why we launched Nomi. It's to help exactly the advisors who recognize that. And there's some advisors who, from everything you've said, like how ready is the industry? We're like at a 3 to a 5. Are we really tooling advisors to become therapists? And is that the business that they wanted to be in? When they came in to be an advisor, is it because they love investments and they love selling the products and learning the products and geeking out on all of the different products and the menus that we can introduce? And when they get here, do they realize, oh no, you're actually going to be a counselor and a therapist? And is that a skill set that maybe they opted into or they were tricked into?
I think it's tricked into, because when I started, I didn't want to be a therapist. It was all about, picking stocks, right? And building wealth through investing. And as I learned the business, I kind of realized that's, you know, very minimal part of what we do is that side of our job is picking stocks or mutual funds or ETFs. It's having conversation with your clients,
Yeah.
and so I think to me the good advisors, the guys who are growing their practice and growing and building, a good business for themselves, you have to have that connection with the client over the trading side to keep growing, right? So, are we doing a good job as an industry doing this? I think the good advisors are adapting and they're growing and doing that. I think some of the advisors who are resistant to that, it's all about trading the bonds, trading the stocks. My opinion is from the ones I know, I think are more stagnant, right? Because you don't you're just a stock picker, you're just a bond trader, and that's why they see you as the person they talk to. Where, I can think, I think the some of the advisors do the best job of that as the female advisors because they're more empathetic than the guy advisors, right? So they have these conversations. It's easier for them to kind of share the emotion or share the connection with the client. Where the guys, I think, have to learn about it more. We've got one, two, three female advisors in our office, and I like in client meetings, they're great because they just really build that connection on an emotional level better than guys do. And so I think it kind of comes more natural to the female advisor, where the guy advisor has to learn it and kind of adapt. And I think if they do, they grow and do really well.
Yeah, I appreciate that. So, Chad, last question on the podcast is always, what is an instance in your life or a conversation you had that has changed your personal relationship with money?
I think for me, if I was to kind of think about my own personal relationship with money, it goes back to when I was growing up. I grew up in, outside Omaha, Nebraska, a little 900 square foot house with four people, one bathroom, three bedrooms that are the size of a closet. And back then you didn't know any better, so we didn't really want for anything, and it didn't really bother us. But I just remember when I was a junior in high school, I think it was sophomore and junior. I was playing basketball, and the team had a relationship with Nike, and so Nike came in and they offered us discounts on their new high tops, and it's going to be the team sponsored high tops, the colors and everything else, and they're like $110, whatever it was. And I remember everybody on the team was able to afford that except for us, so I wasn't able to get the new Nikes because we just didn't have the money to buy the new Nikes. Now, I know if I would have fought and really pushed hard, my parents would have bought me the new Nikes, but it wasn't in the budget and it's gonna be really tough for them. And so even though like I said, I didn't bother me, it didn't really upset me, and I didn't really care that I didn't have the new Nikes. I was happy with the old ones I had. But in my mind, I'm like, I don't ever wanna be like that when I get older, where, my kids can't have the new pair of shoes, and or, our first time traveling on an airplane isn't when I'm 17 years old, and our vacations are to Worlds of Fun in Kansas City, Missouri for 2 hours away because, we can't go anywhere else. And so I always told myself at that point I wanted to learn about money and teach myself about money and investing, and so that kinda guided me to how I became an advisor, because I didn't want for things when I got older, and I didn't want my kids to want for things when I get older, right? Now, has things gone too far a lot in our world, and where now kids don't want for anything and life's become a little bit easier for them? Probably. So there's that fine balance there, but that's kind of why I would say is my what really kind of shaped my view on money is just growing up in a lower middle income household, and when I got older, not wanting to be in that place, and I want to be able to take care of myself, my family, and do well.
Thank you for sharing that, Chad. It was a beautiful story, and I'm sure so core to everything you do and everything you bring every day to your clients.
Yeah.
So I appreciate it. Thank you so much for joining us here. We really appreciate your perspective, that lasting financial confidence. It doesn't come from the markets, it doesn't come from the products. It is from being understood, really defining what good looks like, balancing what your wants are versus your capabilities to achieve those. I love all the stories you shared about. Making sure that you're actually measuring out that lifestyle and the lifestyle creep avoidance in order to make sure you can survive living in that way that brings the most fulfillment. I appreciate everything that you shared also about Seapoint and the culture that you're creating across your whole team. If our listeners want to hear more about Seapoint, where should they reach out to you?
So our website is seapointwealth.com, which is, talks about our company, how we do things, our process, our goals based wealth management, and all the advisors are on there. So you can see the other advisors at our firm. And then my email is chad@seapointwealth.com, which comes directly to me. And happy to answer any questions anybody has.
Thank you so much, Chad. And for our listeners, what's a financial decision you've made that gave you the greatest sense of freedom? Not necessarily the highest return. I also have another question for you listeners. We heard some really great stories during this podcast. You heard one story about a guy who thought he was going to retire with 10 million and made some great investments and got to 25. You also heard about a guy who and I don't know if they're all guys. We'll just say guys for shorthand, who actually made some mistakes by listening to Instagram for financial advice and didn't really work out that well for them. So, which of those two stories was the one that you are going to take with you to actually be inspirational in the way that you are working with your clients or your financial advisor? We'd love to hear your thoughts in the comments. If you like this podcast, please rate it on your favorite platform. We got some extra ratings last month. So, whoever you were, I want to send you extra thanks. Those mean a lot to us. Please also send us your comments, your questions. I want to hear what you liked about this. Thank you so much for joining us, Chad.
Thank you. Appreciate being on.
Thank you for joining us on the Knowing Me, Knowing You podcast. If you enjoyed this episode, share it with someone who needs to hear it. And don't forget to subscribe, rate, and review. Your support helps us bring more transformative conversations to you. Until next time, keep discovering, keep growing, and remember, you're in control of your own financial story. Follow us for more conversations on financial confidence, self-discovery, and the future of money.